We have too much euphoria. Is all of this simply getting too hot to handle now?
Well, potentially we do have too much euphoria. We're certainly getting very eager about the reopening of the economy and getting back to normal. It's going to be, we think, a very volatile year end. We still have a lot of opportunity for ups and downs as we wait for news of the stimulus package, which we think the market largely expects. And we have some great outwardly looking expectations as we look out, 1 year, 2 years for companies. But this is still a couple of rough months ahead of us as we work through this. So I think the market is going to be back and forth on their opinion around that. So far, optimism has won the day.
Yeah, that's for darn sure. Jimmy, is it too much optimism? Does it make you nervous? Should it make investors nervous? Or is this just a sign of how good things really are?
I will agree with Susan that there is obviously a lot of euphoria in the market when you look at various indicators on sentiment, on valuation. But that said, the market is looking past the near-term issue with the difficult COVID winter to the recovery sometimes in springtime and into a more sustained recovery in 2021 and beyond. I think one of the issues is that a lot of the good news might have been discounted already. So it's a market that you will have to do more work to uncover undiscovered opportunities.
Susan, does what we're witnessing with DoorDash and Airbnb, does it make you want to ride this continued wave in tech, especially the highest growth portions of it? Or does it scare you enough that you say, well, maybe now's the time to rotate because I am getting more optimistic about the reopen into next year?
Well, I think November was the time when most people said, yes, it's time to rotate. I'm getting more optimistic. We have a slew of vaccine Mondays, and I think sentiment started to shift then. At this point, I almost think it's been overdone. And so while we have a lot of optimism going forward, we're forgetting that longer term, the companies that we want to own are really the companies with growth ahead of them. We like some of these business models very much. And I think it's important to think about what you want to own a year from now, not just for the next quarter. As we come into year end, I know investors have a lot of decisions to make. There's a lot of window dressing on those portfolios from institutional investors. And so I think you should be very careful where you're trading. I don't think you give away big tech just yet. I think there's still plenty of room there. You can keep with it for a while.
Jimmy, it sounds to me, I mean, you agree with the value trade, but you feel to me from looking at some of the notes here that you're a little more nervous about where we are now, and you think a pullback could be in the cards before we have a reset into the new year.
I do expect that once we get the stimulus and we already have the good news on the vaccine side, there could be some profit taking. And this is natural in a market that goes back and forth. And pertaining to big tech, some of them have really peaked in early September. So they're kind of in a topping process. I do expect many of the names that have benefited from this work from home environment here in 2021 will likely underperform in, here in 2020, will likely underperform in 2021. Some of the laggards, that will likely have, accelerated earnings growth next year could outperform. But that said, some of these are quality names. They may underperform next year, but, from a portfolio standpoint, you may not want to sell all of it. It's prudent to, perhaps take some profit from a tax standpoint, be cautious with it, but still, keep some exposure to it.
Shepard Smith here. Thanks for watching CNBC on YouTube.